Good afternoon. I hope everybody had a great day today. I hope everyone had a green day today. Today's video is presented by SheTrades. And for those of you that do not know me, SheTrades is my mentoring program. It's for any level of trader. This is a strategy that I have coined myself after so many mentors trying to teach you a strategy and it doesn't work. You have to figure out what works for you. So I hope this strategy kind of helps you trade the open. It's called the OPB strategy, and LPT is low premium trading. That's how I trade. That's what I trade. I don't buy contracts over 50 cents. And the OPB stands for open price breakout. So I don't worry about the range. If the market opens and it cannot hold the open price, it cannot get above the open price, I know it's going to drop. If the price gets above the open price, I know it's going to continue higher. So today I'm going to show you how to set up the simplest indicators for any new trader and to make your trading hopefully a little easier. The first indicator we're going to add is the open range breakout lines. And it's by Tret Hacks. Next, we're going to add the TTM trend, the TTM squeeze on here. It's by Greeny. And then we're going to add simple moving averages by stocks in box. And that's it. So when you first add the stocks in box indicator, it looks like that. So all you have to do is go in and uncheck everything but number one. And on number one, make it the 7. Now, if you like a different number, if you like the 13, if you like the 8, if you like the 9, if you like the 21, by all means, use what you like. Once you uncheck all those, you should have one line or two if you decide to leave 2 on there and do the crossover method. So this strategy is pretty basic. So this is the pre-market high right here, where you don't have to draw the line. This here is the open price right here. And this line here is the low of the pre-market. So normally when the stock breaks the low, that's just an immediate push to the downside from my experience since I've been trading this strategy. Now, if price was to go above the green line, we would take calls. If price stays in the middle in a range, we would not take a position. Like I think yesterday, the market range for a little bit. Let's see. So here, like yesterday, this here was our open price. So if price is not all the way above the open price and holds, we don't take a position. Like here, it goes up, but it gets rejected right here. And right here, it could have been a quick scalp. If you wanted to play a little risky, it could have been a quick scalp right here. Because once it opened, it found support here. So you got 1, 2, 3, 4 times price touched. So you could have scalped here once you saw the TTM go green right here. And then also this simple indicator, it turns green and red. So once it started to turn red right here, as well as the TTM, that's when you would exit your position. And then just sit back and wait for more confirmation. Or you could have just taken a put. If you wanted to take a put, you got your levels right here. This will be the first target price right here. This will be your second profit target price right here. So it just depends on how you trade. And then even if you just change the time frame, because I had that on the 1 minute, because I normally keep it on the 1 minute when the market opens. And then I change it to the 3 minute. So this is what yesterday looks like. So on the 3 minute chart, this looks nasty. Nobody probably would have got in there. And then here, it never broke the pre-market low, so it would not have flushed. So if you had got in here, it could have been a quick scalp, but this should have been your profit target right here in case it did not break through. Because it had very good support right here, 1, 2, 3, 4. And then right here, your TTM is green. Right there where it's dropping, the bulls were buying right here. Once again, we're at the pre-market open price. This is the open price. So once we get here and we try to go one more time, we couldn't. So we're wicking right here. We're getting stopped right here. So we're just kind of waited out until it breaks all the way above the green line and holds above the green line. So that's why I told you over here, price needs to be all the way below this red line or all the way above the yellow. The in-between is kind of just quick scalps. If you like to scalp, then that'll work for you, but I don't like to scalp. So I use this strategy mainly on QQQ. And when I do this, I go about 10 strikes out the money. So like when it breaks here, and I know it's going to be a big move because it broke the pre-market low, that's when I know I can do that. This morning, the 276 QQQ puts were 32 cents and they ran to 150. So this was a huge move, and that's why that worked. If you don't have a breakout, it's not going to work. So like yesterday here, that would not have worked well until it got to here and it broke above. So that's the only time it's a little more safe to buy out the money. 10 strikes anyway. Other than that, just stay 3 to 4 strikes out the money. Well, that's the end of this strategy. I hope this helps. I hope you can make some money off of this strategy. Let me know how it works for you if you decide to use it. That's all until the next video. Have a great day. Bye.